Today FM's Last Word on Business with Capital Flow. Purchasing, refinancing or refurbishing an investment property? Visit capitalflow.ie.
Ian Guider, columnist with the Business Post, is with us for the business news. And Ian, we'll kick off with house prices because we're looking at a surge nationally of 7% over the last 12 months. This is according to new data from the CSO.
Yeah, good evening, Will. And I was thinking back to your conversation about rental increases earlier on this week and wondering, would house prices actually manage to grow faster than rents? Well, they are, and they are accelerating quicker and quicker each month this year. So just to give you the figures put out today by the CSO, they cover June. So if you take June from May, so month on month increase, 1.4%. But June 2021 compared to June last year, so an increase over the last 12 months of 6.9%. And it is mostly house prices because there's very few apartment transactions. Apartment prices nationally increased by 2.1%. But if you look at house prices, so physical house price sales in Dublin and all around the country, growing much quicker. Dublin house prices up by just over 7%. In parts of Dublin, the increase is even higher. In South Dublin, it's almost 9%. But outside of Dublin, prices accelerating much faster. In the border region, prices increased compared to a year ago by almost 14%. So buyers who are locked out of the east coast of the country, which is where the majority of transactions are moving further and further away. So we're exporting house price inflation to the rest of the country. House prices overall now are just 12% below their peak reached in February of 2007. Transaction numbers are up. So we have seen a recovery in the number of transactions compared to a year ago, up by 71% compared to June last year, but an increase still 15% higher than the number of transactions in June 2019. And you have to wonder, how much longer can this go on, these type of price increases? It is all down to supply. There's nothing to do with COVID here in these figures. It's just that we do not have as many homes for sale as people want to buy. There's a separate report today. It was done by Ronan Lyons, the economist at Trinity College, carried out on behalf of the property industry lobby group, Irish Institutional Property. And he's forecasting not only do we need to reach in the next couple of years the figure that's well cited of 35,000 homes per year to meet natural demand, because we haven't hit that figure in any year since the last economic crisis, we may actually have to build 50,000 homes per year, every year, until the middle of this century, just to catch up with all of the existing demand from more people in the economy, more people in the country, but also to catch up with the fact that we haven't hit that target of 30,000 for so long. It's astonishing, Will. And I know COVID dominates the airwaves, but the crisis of housing, which was really the talking point of the general election in 2020, it is going to be the big thing of the next couple of years again. When you see the figures that we have out today by the CSO, people forced out of the housing market into the rental market, and while they're trying to pay those high rents, house prices are just accelerating away and again. And I think it'll probably be the next year by the time we reach the Celtic Tiger level of house prices.
Ian, I remember when Glanbia, once upon a time, were primarily a milk company, but they've expanded their business out and they've gone into sports nutrition and other dairy products. And it seems that diversification of their business is paying off. They've posted some pretty impressive figures there.
Yeah, there are half-year financial results out from Glanbia today. And as you said, a lot of people do tend to associate them with Milk and Avonmore and Premier Dairies. It's a much bigger company. It's now let that business aside for many years. And now what it sells is sports nutrition. So those big protein shakes and protein bars. It owns the biggest brand in the business called Optimum Nutrition. And the company doing really well. Profits this year, 133.5 million in the first 6 months of this year, compared to just under 70 million a year ago. Revenues up by 20% to 2 billion euro. They would have been affected in the early part of last year due to the pandemic. Lots of the health food stores closed, lots of gyms closed where they would sell these products as well. So you are seeing a big increase in turnover compared to last year. Shareholders are going to do very well out of these results. Glanbia announcing today that it's increasing its dividend payment to shareholders by 10% compared to a year ago. And it's also going to to use around 50 million of its own cash to buy back its shares on the open market, and that should actually lift the share price a little bit further as well.
KBC are very much on the verge now of selling to Bank of Ireland, but we've got some details on the redundancy terms even that are being offered to staff.
Yeah, so when we got that shock news back in February that KBC Bank were pulling out of Ireland and selling their performing loan book to Bank of Ireland, that transaction is still ongoing. It hasn't been completed just yet. Well, would the 1,300 staff that KBC employ around the country, would they move over or would they be let go? All KBC could say at the time was that they would have job security until October of this year. So we now got some of the details of the terms of the redundancy deal if staff don't transfer over to Bank of Ireland. So all staff will get a minimum payment of €17,500 plus their statutory entitlements. But the actual redundancy term, so your statutory entitlements is 2 weeks per year of service, capped at €600. But the bank will also pay an additional 6 weeks per year of service. And if you're somebody who has been with the bank a long time, if you've got over 20 years of service with the bank, they'll give you an ex gratia payment of $5,000, and there'll also be a $5,000 payment in there as well for a retraining grant, and they will pay health insurance costs for their staff for 2 months past when they transfer, when they leave or take that redundancy terms. The union, which represents bank workers out there, are still saying that the majority of workers, the Bank of Ireland, when they do buy the performing loan book, that they should be transferring over. However, it's not as simple as that, Will, because they're not buying KBC Bank as such, as in the physical assets and everything and staff to transfer over. They're actually just buying the loan book. And when banks buy loan books or when vulture funds buy loan books, they don't normally tend to take over all of the workers who were relationship managers or bank branch officials with that. So there's a bit of a concern that perhaps not all of those 1,300, or maybe even if any of them, will transfer over to Bank of Ireland.
Ian Guyder, columnist with the Business Post, many thanks for joining us.